Good morning, ladies and gentlemen. It is December 19th, 2023, 8:46 a.m., and we are back for another market open. Ladies and gentlemen, we are alive on planet freaking Earth. Isn't that insane? On December 18th, 2023, we're here as human beings. Who even knows what a human being is? We're just like these sacks of meats that are on this big blue planet roaming around the Earth. By the way, if you look at Earth on the solar system, and then you really go out of the solar system, you look at the Milky Way galaxy, it's like a tiny speck on a tiny speck of a tiny speck in the grand scheme of existence. And all of us are here today, alive, actually breathing, able to consciously experience this reality. And on this reality, we have a stock market, a market full of stocks. And that market full of stocks, once again, is green. It's green, it's green, it's green, it's green, it's green. It feels like Christmas because the stock market is continuing to be green. And the reason it's continuing to be green is because, well, Santa Claus came to town. Santa Claus came to town. Ladies and gentlemen, we've got a beautiful, beautiful stock market. S&P 500 up 0.24% in the pre-market. All the crypto companies are up for those that are in crypto. Robinhood touching $12.20 in the pre-market. Palantir, $17.96, trying to get back up to $18 in the pre-market. Nvidia at $493, it hit 500 yesterday. NASDAQ at 14,904, trying to close in on that 15,000 level. I mean, what more could we have asked for out of 2023? So we've got a lot to talk about today, why the stock market continues to go green. Google paying a $700 million fine, really not affecting its stock price too much, and what that means for Google. Palantir institutional holdings are up as of December 15th. Didn't expect that to happen given we've seen a decent amount of sell-off, but I guess the retail is selling more than the institutions since they're loading up. So we're going to be talking about that and a lot more that we have to talk about. Richard says Amit did a line of cocaine today. You know, I don't know what cocaine is, but I do know that the snow is blowing outside. Okay? It's very windy. It's blowing, if you get my drift, outside. So I don't know what cocaine is, but I do know that the snow and the wind is very blowy outside, if you get my drift. No, I'm just kidding. I don't do blow. I remember in Vegas when I was when we went live for the market open, I hadn't slept the whole night, so I was actually like, it looked like I was on blow, but I wasn't on blow. And everyone was just like, "This guy's on cocaine in Vegas." I'm like, "No, I'm not on cocaine in Vegas. I'm just trying to keep myself up for the market open because I have not slept in so long." Dale Scott, Theo, Miami Ren, Kane Frost, Brad Appeal, I Show Shad, Raul Wynn, John Stevens. Happy Tuesday from Wisconsin. Happy Tuesday to you. Wisconsin reminds me of That 70s Show because all those characters were in Madison, Wisconsin, or Milwaukee, one of those. So that you always remind me of That 70s Show. Mario, Mikel, Greg, Carter, Midwest, Imnop, Greg, Mr. Russo, Miami Ren, Mikel, Blake, D-Pen. Thank you all for being here today. Felicia, Richard, Peter Girardi. Peter says, "Good morning, Amit. Are we rich yet?" Well, I mean, some of your portfolios and those paper gains are probably doing well. Justin Muhammad, what's up? Billy, good morning, all the way from Long Island. I love it. Wayne Johnson from England. Mario, Gerald Findelli from Arizona. We got Arizona in the house. Absolutely love it. Someone says, should I do abs or shoulders in the morning? You should do abs. You should do abs. I say this as someone who doesn't do abs, and I need to get back into the gym, but I will be getting back into the gym soon. Guys, I'm also thinking of doing something. I'm thinking of upgrading the set. I'm thinking of like treating myself at Christmas, and like, I'm not just saying this because the stocks are doing well. Genuinely, like, you see this mic right here? You guys want to see something funny, bro? I don't even know if I can show it. Dude, I can't show it because I don't want to mess it up. The only reason this mic is stable is because this big ass water bottle, you saw the mic just went down, is being used as a paperweight on this stupid like little desk to keep the mic from like not falling. Like, I think I need to upgrade some of this technology because this is not fair anymore. Along with this computer, I think I need to get a Mac because this computer streaming off of it is fine, but I do think it could be more efficient. So maybe this Christmas we're going to upgrade the set and really make it a lot better. You need some cinder bricks for the wall. The one thing we will be not upgrading is this fucking brick wall. Because, you know, when you're doing cocaine, you got to have the bricks in order. Okay, anyway, let's get into it. Market open. What do we want to start with? I think we'll just start off with the macro today. I think we'll start off with the macro. S&P doing well. Market in general is doing well. Now, why is the market doing well again today? I think that it is becoming more and more evident that there is a need for investment managers to continue to get some more money in this to continue to get some more money into the stock market. And the reason they want to continue to get some more money into the stock market is because there is just a lot of momentum that is chasing the markets. And as a result of it changing the markets, a lot of investors are thinking, you know what? Maybe we need to get some money in. By the way, I have some pretty interesting news. I think a lot of you guys are going to appreciate the news I'm about to say. So what I just said is that a lot of money has to get, the reason the market is continuing to rally going into December is because a lot of fund managers are like, you know what, we need to get some money into the market because we don't have enough money in the market. Our candidates have not, our clients have not pummeled enough money into the market. They've been getting 5% on the sidelines. We need to get them to make money. If the Qs are up 40%, if Amazon's up 50%, if S&P's up 22%, we need to also be participating in this rally. Well, here's the breaking macro news, folks. Here is the breaking macro news that you guys get on the market open and have a better understanding of what's going on in the world. Money market funds as of December 14th, 2023, which this came out yesterday because it goes a week late, have decreased by $11.5 billion to $5.89 trillion. Money market fund assets in the United States of America have decreased by $11.55 billion. This is the first decrease in 10 months. Every single time this money market fund update comes out, we see an increase. Just on December 6th, we saw an increase of $70 billion. This was $5.95 or $5.93 trillion on December 6th. This is the first decrease. And I think I remember I said that when we saw the latest update that as soon as we see the first decrease, there is absolutely a sign of some money leaving and you know, things starting to change a little bit more in terms of how the market is going. That decrease means that there's money that's starting to flow out of the stock market or out of these money market funds into the stock market. Now, why is that happening? Well, this goes to everything that we've been talking about for a long time. The biggest thing is Jerome Powell said he's going to cut rates 3 times next year. Some analysts are saying it's likely going to be 5 times. Oil prices are starting to really get into that $70, $75 range, which is great for inflation. Housing is starting to come down. There are just so many macro factors on top of AI, earnings growth, all this shit where you're just like, dude, you're trying to fight the Fed at this point by being bearish. And even Mike Wilson, we've got to talk about this guy. Mike Wilson turned bullish yesterday, which is just absolutely insane. So we're going to talk about him as well. But money market funds, that is the breaking news for the macro this morning, have decreased dramatically. And as a result of that, we've seen some momentum here. Chris just sent me a picture on Twitter. Let me pull this up. Here's a little bit more of where the money went from those money market funds. There we go. Oh, wow. This is nice. So rolling 1 week ETF flows by category. This is as of last week. So here's where the money is actually going. US large cap got $28 billion. Wow. So this is like the QQQs. This is probably S&P, right? These are essentially the indices that hold most of those NVIDIA, Tesla, Amazon, Microsoft type of companies. Thematic got about 390 million. US small cap got 4.8 billion. That's a big deal. That's probably why we're seeing small cap continue to do well. IWM this morning in the pre-market is, where's IWM? IWM is 198, trying to close in on 200 here. High yield got 1.56 billion. Global got 2.87 billion. Broad equities got 5.44 billion. But large cap continues to get $28 billion. So when people say, you know, can large cap continue to rally going into 2024, which even I've been a little skeptical, like, can large cap continue to rally? Large cap might just end up being that flight to safety. Large cap might just end up being those companies that are the companies that you want to bet on when it comes to AI, that can do the buybacks, that have the cash flow, that have the EPS, that have the ability to financially engineer their EPS to appease Wall Street. Apple buying $6 billion of their own stock every single month. It seems very, very positive that money market funds are leaving or at least are decreasing. And some of that money is going into the sectors that we need it to go to, which is stock market and ETFs that are largely concentrated in some of the biggest tech names in the world. So that is the big macro news. Again, let me share it one more time for those that are just joining. Money market funds, the people that have been collecting 5.5% on their money for the majority of the year and have not participated in the rally because they've been afraid to play with the big boys in the stock market, which granted, I understand why people have been afraid this year. It's been a hard year to be able to make investments. $11 billion have decreased from those money market funds in order to enter into the stock market, which means, look, if that happens again next week and the week after that and the week after that, where do you think the money's going? It's not going to crypto. If you put your money in a money market fund, some of it will go to crypto, right? So that'll be good for crypto in general. But my point is, a lot of people are going to say, all right, well, if we can't get it in the money market fund, let's start buying some safe names. Maybe we'll buy some Verizon, we'll buy some Truist, we'll buy some regional banks. Maybe we'll buy some big tech because that's really safe. We know Google's not going anywhere. And so it's just more liquidity entering the markets. Maybe we'll speculate a little bit on a Robinhood or a SoFi. And there's just going to be a lot more momentum coming in if this trend continues to go higher. Let's talk about Mike Wilson for a bit. So Mike Wilson is the analyst at Morgan Stanley. He has been incredibly bearish for the majority of the year. And yesterday is when he flipped bullish. Artist here says, it feels like this money market fund narrative is now so ubiquitous that the narrative has built itself into prices. I don't buy it, but I'm still buying. I didn't know what a money market fund was until like 5 months ago, quite frankly. I think a lot of us didn't know what it was. Maybe some of you that are older and have put your money market funds knew what it was, but I think no one cared about knowing what it was because you only care about things that can get you like a return on your money. So once it was like, oh, you can get 5.5%, everyone was like, what's a money market fund? And then we saw $6 trillion into this shit. I was like, what the fuck? $6 trillion in these. And so, yeah, it is a ubiquitous narrative that's being baked into kind of the stock market. The question is just if it's going to follow consensus or if it's going to be a contrarian signal. My thing is just logically, if that money's leaving, it's going somewhere. It's not going back to savings accounts. It's not going back into under your mattress. So it has to be going to somewhere where it can generate return. Maybe it's going to bond yields. But again, money markets, we're paying more than bonds, right? Given the certain type of bond. So the stock market seems like the inevitable conclusion where it's going into. Did Amit just call a regional bank a safe name? I'm not, maybe that wasn't necessarily, yes, probably not safe in the traditional sense. But if you just do basic due diligence and the regional banks aren't collapsing and how undervalued they are, it's probably the regional banks to me are the more safer small caps that exist, right? Like you're going to pick a small cap that's unprofitable versus a Truist bank. I mean, like that's paying a 6% dividend. That's still that's top was 64 and it's at 37. It's like from that perspective, it feels a little bit more safer, but I get your point. Regional banks are not the safest in the world. Artist here, thank you for the $4.99 super chat. It means the world to me. Thank you so much for the $4.99 super chat, Artist here. Thank you so much for that. It means a lot. So Mike Wilson. Why did Mike Wilson turn bullish yesterday? Well, he has said, and let me quote him right here. Let me show you guys the quote as well. And pay a dividend. That's correct. So-called. Yeah. And they pay a dividend. Mike Wilson says this is a bullish outcome for stocks with Powell not pushing back on the easing in financial conditions. Equities appear to have the green light to ramp higher. The last time Mike Wilson flipped bullish was at the end of July. We proceeded to have a strong pullback in the first weeks of August when he pulled bullish. Now, remember, Mike Wilson turned bullish in July, but he wasn't actually bullish, okay? He was a bit more bearish. His argument was that he believes, and he actually called it perfectly, his argument was that the S&P is going to drop about 10% in September, October. It was called his shot clock thesis, right? And he was like, we have a shot clock on the market. It's going to fall back 10, 15%. And that's when either it continues to go down or it makes its leg up, but that's when he'll think about getting money back into the market. That happened, right? S&P got to 408 back in end of October. October 31st was the bottom. And so we saw a really, steep decline back in October. And Mike Wilson, from my understanding, didn't get back in. Didn't get that money back into the markets. And he continued to be bearish because once, something drops 10%, you're like, you know what? I was right. Let me just wait till it gets to 3,400 because I said it was going to go down anyway. Well, November kicked everybody in the balls, quite frankly. If you didn't have money in the market in November, you did not make money, right? Like the money was meant to be made in the month of November. And in majority of stocks, obviously December is when kind of SoFi broke out, right? So November was a tough month for SoFi, but in general, November was great. And then we had the Fed meeting, which tore Mike Wilson's thesis. And so now he's officially bullish. I think even Mike Wilson being bullish isn't really enough to get the markets to be that scared and use it as a contrarian signal, because there's just it's really hard to think of all the different bear theses playing out when the Fed has indicated that this is where they're going to go. There would have to be something dramatic in regards to, I believe, inflation or a black swan event that changes everything. The problem is everyone has looked at the same inflation data. The Fed has looked at better inflation data than everyone else, and they've come to the conclusive understanding that this thing is not something that should keep rates higher. Robinhood right now at 1209 in the pre-markets as well. And as a result of that, I think Mike Wilson's also like, dude, I can't fight the Fed on this. Like they are not going to try to crack the markets if there's no reason to crack the markets. Hell, they tried to crash the Fed has tried to crash the market for the majority of the year. They couldn't do it because they somehow figured out how to keep growth high while keep inflation low. I mean, that balance of keeping growth high while keeping inflation low, I don't know how the Fed has done it, but they did it. And as a result of that, it has gone higher. Michael Wilder, good morning. Thank you for being here. Heinz talks about the fear index. Yes. Now, this is one thing to think about. The fear index is getting into fear, but not extreme fear. Let me look at it because I tweeted it last night. It is getting into, we're at what, 70? We're getting into extreme greed at 77. So real extreme greed in August was when we saw 89. That's when we really had the pullback. Here's my thing about the fear and greed index. I think that fear and greed index might mean that we don't have a crazy rally, but we don't have a crazy sell-off. And that's what the fear and greed index is kind of indicating to me right now. Maybe, when we get to extreme greed, like right now, if the S&P was 500, yeah, that would be extreme greed. S&P is still not at all-time highs. S&P is slightly above its a previous 52-week high. Previous 52-week high was 467 or something, right? So we're at 471. It's not that crazy. If we just end the year at these levels, I think all of us will be happy. I think the market wants to push higher, though. And if the market pushes unnecessarily higher, like if we get to 500 or something, yeah, then we're going to get us all. That's just unjustified because analysts barely have the S&P at 5,000 at the end of the year next year, right? So that would be really ridiculous to me. But at 470, I mean, I'm not saying that it's definitely undervalued, but I'm not saying that it's massively overvalued to the point where the fear and greed index indicates this huge sell-off that's coming. Because again, you have to ask yourself the question, if you sell off the stock market right now, where the hell do you put that money? Do you put it in a money market? Well, those funds are coming down. The return is coming down. Do you put it into crypto? Well, that's a little bit more volatile, right? And like if you do that, that's still a lot of liquidity in the granular scheme of things, in the grand scheme of things. So, there's still more money in the markets. Do you put it in your bank? Those saving rates are going to come down soon. Robinhood's not going to be able to get 5% forever when the Fed lowers rates. So where the hell do you put the money? I mean, like you got to park it somewhere. And whether it's big tech or Bank of America, you're going to probably put it in the stock market and then speculate with a little portion of it. And that's going to give more liquidity into the markets writ large. Adobe at $600, up 0.21% after their, what did they do? They canceled their Figma deal. So market liked it. So we got Adobe that's up right now. Let's look at the crypto companies and let's see how they're doing as well in the pre-market. So we've got, what do we got here? Let's go to Coinbase. So Coinbase is up 1.34%, 155. We got Marathon. By the way, I want to run the New York City Marathon one day. 3.87% Marathon. We got that. We got Riot. What is Riot doing? 3.66%. We got CleanSpark. CleanSpark 2.86%. Dude, whoever had those $8, $10 calls on CleanSpark, I mean, congratulations to you. You might want to think about, just in case Bitcoin is a little volatile, taking some off the table, taking some profits. I mean, obviously, if you believe Bitcoin's going higher into 2024, and you have a low margin of, if you have a high margin of safety, low average on those calls, I would hold them, quite frankly, at this point, because if we think Bitcoin's getting to 50, 60K, if that could happen, or even, 48K, these fucking miners are going to print. I mean, the calls, if you got in like this, I did not get into this trade this year. I just did not get in. I mean, I got into Bitfarms for a little bit, right? But like, this is the trade I missed. This is a real end of year trade. And it's funny, JP Morgan put out a point that a CleanSpark at $3 was the best Bitcoin energy miner. So if you had to know the crypto bull market was coming or starting to happen to get into the crypto and a miner trade, because the miner trade is the easiest trade there is. Like, these companies literally can't not make money if Bitcoin goes up. And the reason they were depressed for 2 years is because Bitcoin fell from 69 to 15,000, right? So CleanSpark was 95 cents in the beginning of the year. Like, imagine you said, okay, by the end of 2025, it'll be $10. You're making a lot of money off that call right now, right? So if you have the crypto ones, maybe you trim a little bit because of the volatility of Bitcoin, but also if you believe Bitcoin's going higher, maybe those are going to outperform towards the end of the year. Apple at 196. Apple has decided to stop selling the Apple Watch for a select amount of time in the United States because of a certain regulation. They're in a lawsuit with another company on if they can allow a oximeter on the Apple Watch, which allows you to know how much your pulses on a scale of 0 to 100 for your breathing, your oxygen levels, which is actually very useful. I mean, like, that's actually super useful. Everyone, if you remember during the pandemic, everyone probably bought one of those. Apple having that in a watch is actually like a reason for me to buy the watch. I've never thought of buying the watch. That's actually like a really useful thing, but they're getting sued for that. So they're not selling the watch until they figure that out in the United States. So that's one thing. The stock market didn't really care too much about that. Netflix at 486. Netflix trying to crouch in on $500, which would be incredible. Remember, the top on Netflix was 700. So I mean, getting back to 500 would be a hell of an accomplishment. MicroStrategy up 1.59% in the pre-markets. Meta at 345, new 52-week high. I mean, absolute goodness gracious. It's insane. I shared the most downloaded apps in the world on November yesterday. Instagram at another 49 million. Facebook at another 39 million. WhatsApp another 20 million. Messenger another 15 million. I mean, this is the one company I want to own. I want to own Zuck's vision. I do. I know a lot of you in the chat will hate me for that because you guys hate Zuck, but I want to own this vision of making $50 billion off just fucking showing ads. Like, because when I think of Meta, I'm like, where are people going? They're not leaving Instagram, Facebook, WhatsApp. It's just not happening, right? It's like, it's just not happening until I see another social network that has amalgamated that much data. I don't see it happening. And it just feels like a better advertising than Google too, because Google's so reliant on search, even though I don't think search is going anywhere. But I think buying it at these levels is a little tough. I mean, maybe 300 would be nice if we get there somehow, but I don't know. 850 billion is but even though Meta's not necessarily overvalued, their PE's at 24, PE's at 31, but it's growing. That's what you ask for. Apple at 31 is barely growing. So companies are up in the pre-markets. Robinhood 1212. We'll see how Robinhood performs. Robinhood's been trying to break out of that 1250 level, and it's been hard for them to do that. Palantir at 1793. Let's talk about Palantir for a second, but let's see today if Robinhood can make a run. Robinhood, if it gets to 13, that's what we're looking for on Robinhood. We need to break 13. If we can break 13, I think we're going to be in a much better spot. But breaking 13 has been not the easiest for Robinhood, given it's been a consistent point of resistance. So if we can get there, we're going to see some, momentum, but getting there is not the easiest. Chris says MicroStrategy was a huge name 20 years ago in the Washington, D.C. region. Not sure how they are doing now. In terms of the business, they're growing 3% year over year. I looked at their financials, but they own 174,000 crypto. So as soon as crypto goes, I mean, they're sitting on $2 billion in profits from crypto. So, and they collateralized their debt to be able to do this. We talked about this on the show a couple of 7-8 episodes ago. Their debt is convertible to shareholders if their share price is at or above $517.93 in January 2025. Right now, they're like $590. So what happens is their debt basically turns into shares. So it does dilute shareholders, which is like not the best. But at the end of the day, if you're sitting on that much profits of Bitcoin, which you only would be doing if Bitcoin's up, so that it gets your share price to even get to those levels. The debt shareholders, instead of getting the 0.75% interest maturity on the debt, they'd rather just take the stock, right? So all that debt turns into stock, and then they get to cash out on the stock. So they make like a 30% alpha on the delta between the conversion price and the price they issued the debt at. And then they make money, but then MicroStrategy doesn't have to pay back any of the fucking debt. Like, it's actually genius, but it's genius if crypto's high. If crypto's at 20,000, Michael Saylor's like, he's going to find a bridge if that happens. Right. But like, if that doesn't happen, the dude's going to make a shit ton of money and have to pay zero debt and collateralize this company that's barely growing to be able to buy so much Bitcoin. Like, it's actually pretty damn smart if Bitcoin does what it needs to do. Like, it's actually really smart. But, the question is, will that end up happening by the end of the year? Is that a wedding ring? No, this is not a wedding ring. I just think it looks cool. Does it look cool to you? This is a $7. These are both like $2 rings, maybe $7. I think I got like 5 of them from Amazon. I just think they look cool on top of each other. Am I being a naive 26-year-old thinking they look cool? I thought they look cool, but I don't know. I thought it looks cool. Curious Calculator says Palantir short interest has fallen 17.49% from the last report. The company has reported that 125 million shares are sold short, which is 6.3% of old regular. That is correct. So the short report on Palantir is that the shares are coming down in terms of the shorts because they're covering. So 6% of the float. It was 8% a couple of weeks ago. Institutional holdings as well. Let's talk about that because that has gone higher on Palantir. So yesterday in the Daily Palantir episode, I talked about the bootcamp strategy. For those that missed the numbers, and let me just put this up right here. For those that missed the numbers from yesterday, if you didn't watch the video because you hate me and you don't want to watch my video, you don't want to support me trying to get my name out there into the world. So if you didn't watch the video, I understand that you hate me. But for those that didn't watch it, let me show it. For those that did watch the video, or for those that were subscribed to the newsletter, dailypalantir.com/subscribe, the free newsletter, you already saw this. But for those that hate me, you didn't see it. So I'm going to show it to the people that hate me. End of year bootcamp numbers for Palantir. 414 bootcamps done. 634 organizations served. 27 industries. People were asking how many people are they talking to? I think they're talking to healthcare, energy, manufacturing. I think they're talking to a lot of industries, 27 of them, and over 1,000 participants. The question becomes, going into 2024, what was the conversion on the 634 organizations? Just imagine it's 10%. That's 63 new clients. I mean, last quarter we had like 38 or something. So the growth rate would start to increase. If that 634 organization turns into, let's say it 3Xs, 1,800 organizations by the end of next year, which I think is, it's not crazy. It's reasonable. 1,800 organizations, you start thinking, well, wait a second. If that conversion is 10, 15, 20%, there's going to be some momentum coming in. And so we are seeing that bootcamp strategy start to run up. We talked a lot about the qualitative approach from someone on Reddit who posted that yesterday, which was really important. Institutional holdings. Let me show you guys this. So this was updated as of a couple of days ago. It's higher. It's gearing into that 39%. So before it was at around 36, 35%. Institutional holdings, again, continuing to get higher for Palantir. It's the highest it's ever been, which is a good thing. We know the top three shareholders are Renaissance Technologies. I'm forgetting the other two names, but I know Renaissance is up there. They increased their holdings by 9 million, so now they have 43 million shares. I don't think the other two are BlackRock and Vanguard. I mean, they're always at the top, but like there's a couple of others that are like actual firms that are not just like trying to take over the entire world that own Palantir, and so they're up there as well. ARK has obviously added about 1.5 million shares last week on the dip to like low 17s. I think that at this point, either we see the gap down to 15 and that actually happens, or 17, 18 is the new normal. And I think that gap to 15 is very possible on a really bad red day for the markets, which inevitably is going to happen at some point. But the question becomes, if that red day doesn't happen until Q4 earnings, which maybe it does, maybe it doesn't, right? We'll see what it happens. And Q4 earnings actually crush, even if they don't crush on revenue, but they really crush on the metrics. Adjusted operating incomes go up, margins get better, SBC comes down. Then we're going to see Palantir form a new normal at 17-18, especially with the better macro that's happening. And that new normal is going to be really exciting for Palantir going into the year. I tweeted this yesterday as well. I want to show you guys a couple of things on Palantir here. So this thing I thought was really interesting. Okay, it's at the bottom. I tweeted it early in the morning. This was their adjusted operating income that has started to, that they guided going higher. They guided this in Q3, so it's not like it's new news, but I wanted to bring it back up for people just so they see it and we can talk about it. Where the hell is this tweet? Oh, here we go. Okay. So Palantir raised their full year 2023 adjusted operating income guidance by 33 million. So that's 609 million for the year in terms of adjusted operating income. Now, why is adjusted operating income so important? This is income from operations of the actual business. This increasing matters even more than GAAP profits because it's showing that their actual business is profitable. And the more the business itself is profitable, eventually the byproduct of that will be that the GAAP profitability continues to go higher. So the change in full year guidance was up $6 million, which means up 33 million for the year. So they're guiding for 2.22 billion in revenue. I don't necessarily think they're going to change that. Q4 saying 599 to 603. I think they'll bring in like 604. If they bring in 615 or 620 in Q4 revenue, the street's going to fucking love it, even if the growth is still not, 30%. I don't think they're going to do that. I think they're going to be conservative. I think they're going to stay at 603. They might do that because Palantir tends to surprise on the more interesting earnings calls. So for example, do you guys remember Q4 2021? This was when Alex Karp was in that like pink or purple like I don't even know what you call it, but they rented out like a town hall or something. And like he was walking around and they had a power, it was a crazy like presentation that he did. And that was reporting their full year 2021 numbers. If they want to do a really big event and they like make it special, it might be because they have good numbers. The same thing they changed up for Q1 2023 when they first announced GAAP profitability. There were some of these big earnings where the company just announced something really important. And then the rest of the earnings throughout the year have been kind of right? They really haven't beat on guidance. Nothing exciting has happened. But that first GAAP profitability one and in Q4 2021 were special. If they want to make this a special earnings and they beat by, and remember when they reported GAAP profitability, they beat revenue by $20 million. I think they said they were going to do like 506 and they did 525. So they beat by 19 million. If they somehow beat at that level with the momentum Palantir has and the growth starts to get higher, customer count starts to go higher, AIP starts to really scale, then yeah, I mean, like 17, 18 is going to really start to be a bottom for Palantir if that growth is there. If that growth is not there, then it's heading down. If they fuck up on earnings and growth sucks, we're heading back to 15 because the market cannot handle that premium. But if they just don't mess up, then there's going to be a lot more premium, I think, to have for Palantir, given the market gets excited for it. So that's the update on Palantir, and we'll see how it continues to go from there. Palantir's PE ratio is 254. It's damn high. Yeah, that needs to come down. And the only way that comes down is if the growth gets higher. So I agree. The growth has got to get higher as well. Chris says Palantir will require patience with boot camps. It might start to grow 2x clients each year, but will take time to show returns. Will a competitor ramp up faster and overtake? I think that is another concern that is important to think about as well. And if that competitor ends up coming up, then, we might have to start thinking more seriously about how fast that competitor is scaling. Speaking of competitors, one other thing I wanted to show you guys that was on the newsletter yesterday, and then we'll move on to a couple more macro things. For those that are just joining, big headline of the day, money market funds have seen a decrease of $11.5 billion. This is the first decrease in over a year in these money market funds. And as a result of that, that money is likely coming into the stock market. Still 5.9 trillion, but 11 billion. We are seeing a trend start to decrease in money market funds coming out of them. Snowflake is acquiring companies. Okay, so yesterday, Snowflake announced they are acquiring Samuha, a company focused on secure data collaboration. This is their fourth M&A deal in 2023. And the question it begs, as Arnie puts in this tweet, is this a sign of the company that is unable to create new products? And I wanted to talk about this for a couple minutes because I do think it is a big deal. I do think it is a big deal at the end of the day that Snowflake is continuing to acquire more companies. Why do I think this is a big deal? Well, it's pretty much what Karp said a long time ago on some of these interviews and earnings calls, which is that a company's inability to innovate and build a product inside of their organization highlights two things. Number one, they do not have the nimble kind of startup culture that's inside of them. This is why Google and Microsoft take forever to ship products, right? Like Google, barely could ship Bard until ChatGPT forced them to, because they just don't have that culture anymore. Palantir has 3,800 employees. Each employee generates about $600,000 of revenue for them. They have that culture where they have the smartest people on the planet just building, innovating, iterating every single day, trying to get the company to move forward. Number two, you don't have that culture if you're a company that starts to acquire. Number two, you're out of ideas. Because why do you have to acquire a company? Because you don't know how to make an idea. Think about Microsoft. The reason Microsoft acquired Activision Blizzard and 50% of OpenAI is because they're such a big company that they just can't think of innovative ideas themselves. They're so bureaucratic. They have to acquire it in order to be able to grow. Snowflake is only a $60 billion company. Why are they acquiring in order to grow? Snowflake is not a $100 billion company, not at 500. It's not an Oracle. It's not a Salesforce. Salesforce acquired a company the other day as well. It's not a company that has such, unbelievable amounts of market cap and liquidity that they don't know what to do with their money. They're not even GAAP profitable, for goodness sakes. All right. So the fact that they're acquiring, I am starting to genuinely believe that it's not that that's a bad thing for Snowflake. It's that it shows that it's not like they're coming up with new ideas every single day and they're executing against those ideas and they have, go to markets for those ideas. You have to incorporate a whole new organization, a whole new level of employees, a whole new type of culture. You have to bring them into your ecosystem. Those things have to mesh correctly. That's not an easy thing to do. On top of that, Neeva, their $150 million acquisition of basically a search engine for the enterprise, essentially what AIP, I think they wanted Neeva to become. We have no update on what has happened with Neeva. And their partnership with NVIDIA, bringing generative AI applications to the enterprise. Jensen Huang, Frank Slootman, they're on a stage together, for 30 minutes talking about how great this is going to be. We have no update on that either. So I'm not saying it's a bad thing. I'm just saying, look, we got to get a little bit of information on what exactly is going on here, because I don't know exactly what Snowflake is doing right here. Chris says, Amit, it's easier to buy than build. It saves some time. I agree. But the downside is you've got to incorporate a new organization into your organization, which has some growing costs. And then you have to be able to make sure that you can go to market with that organization in a meaningful way underneath the umbrella company. It's not that it's a bad thing. It's just that, I don't know, in this new generative AI world, Snowflake's not the biggest company. They're not building their own generative AI products. They're trying to just find the generative AI, golden star and buy them up and then try to release them as their own products. Maybe that beats Palantir's strategy. Maybe it does, but maybe it doesn't. And if it doesn't, then, maybe there's a lot of more room to grow when it comes to Palantir. Chris says acquiring companies is also a way to buy talent. I agree. Again, my pushback against this is, why does Palantir getting all the talent and they're not having to acquire the talent, right? Like, if you're having to buy a company to get their talent, why are the best people just going to Palantir? And again, you guys know, I spoke to a Palantir engineer the other day. We went out to dinner and I was talking to him about his thoughts around the world. And his argument was just like, dude, like, he told me I could not live with myself if I worked at Google and I was optimizing advertisements all day. That is the mindset of these Palantir employees, these 10X engineers, right? They are at a different level where they're just like, they understand where the world is going and they want to be part of something that's real. And that's why they go to Palantir versus Google. And so they're not going to Snowflake. You know what I'm saying? It's just, and so in the context of talent, I really do think, and again, we don't even know what Palantir has in the books, like that mixed reality stuff. We didn't know they were working on that. We have no idea what new products they're thinking of for 2024. You only get those new products because you have innovative talent that's actually building the ecosystem and the culture to be able to get those products out there into the world. So we'll end up seeing what happens. Let's get a look on the equity markets. We have 9 minutes until the markets open. Sue Bowman, thank you for the $10 super chat. Thank you so much, Sue. That means the absolute world to me. $10 is a lot of fucking money. They could do a lot of damage with $10. You can get a nice little lunch. So thank you, Sue Bowman. I appreciate you I appreciate you for that so much. $10. Thank you, Sue. It means the world to me. Adam in the chat says they could not compete with Palantir before, and now they're out here playing with. Now they're out of their league with AIP AI. Yeah, I mean, look, we're gonna have to see if these acquisitions actually scale to be able to get the AIP to get into the markets. I don't even know what Snowflake's competitor is to AIP yet. It was supposed to be the NVIDIA partnership, Neva acquisition. I don't even know what they're calling it because maybe I haven't done enough due diligence, but I've tried to look through their earnings and I don't see what their like AI play is yet. But the market's giving it a premium. As we can see right now, Snowflake, as we look into the markets, $199.90, up 0.47%. Snowflake could inch higher because it's beloved by Wall Street. They love this company. They love the SaaS multiples, all that shit. I just think, you're paying $65 billion for it. Is there a product you're actually paying for? Or are you just paying for declining growth? Because Snowflake has had declining growth, even if it's above 30% CAGR. Maybe, but it's just not my pick. I would rather bet on a company that's innovating, not a company that's buying companies at this stage. Palantir and Snowflake are almost at the same market cap. I know Snowflake's above by $25 billion, but at the end of the day, Snowflake's not a multi-trillion-dollar company that's doing acquisitions. They're at the same level of Palantir, and they're having to do acquisitions. Why? I think that's a difference between the cultures and the products of the companies. And I'd rather bet on Palantir at that point. Sue says, Amit is awesome. I love this live chat format. Thank you for sharing the chart. I missed it from yesterday. Love from Portugal. Yes, thank you all for being here. I love the live chat as well. You guys know this market open just means absolutely everything to me. It just means the world. So thank you, 736 people, for being here. It is the best way ever. I don't know how you could start the day better than getting to talk to 730 people about what's going on in the equity markets and get to sound smarter because you say equity markets versus stock market. It's just and I get to test my humor on you guys. I get to test my humor. So eventually when I start doing stand-up, I'll know that I'm validated because you guys laugh in the chat. At least that's what you're telling me. You just tell me how you can't stop laughing in the chat. So then when I go on the actual, open mic nights, I think I'm expecting those people to laugh because you guys have told me they'll laugh. So if they don't laugh, you guys have been lying to me, and that will make me very sad. So let's, hope that your laughter is real. Robinhood, $12.04 in the pre-market, up 0.92%. Adobe, $5.99. GameStop, up 0.46%. Pfizer, up a little bit, 0.7%, up 1% yesterday. Pfizer now a decade low. Still doing DD on Pfizer, but Pfizer, COVID vaccine's gone, so Pfizer doesn't really have a catalyst, so markets kind of sold them off. Maybe there was something there. They do have a lot of cash on hand. S&P 500, 472 in the pre-markets. Clean Spark at 2.58%. Let's get an update from our good friends on the street and hear their perspective on where the market's going in 2024 and what they believe is going to continue to do well. So let's listen to iCapital Anastasia as an analyst, what she has to say for the market outlook going into 2024. Stop Console says, we only laugh at your jokes because Kelly told us to. Amit, LOL, hate to break it to you. You say that. I really think you actually laugh at my jokes because they're funny. I really do. You can say it's because Kelly told you. I think it's because you laugh. I think it's because you laugh a little bit. All right, here we go. Let's see what this blonde lady has to say about the market going into 2024. Here we go.
Why do you think it's going to get even better next year?
Well, good morning, Becky. And it's been a phenomenal year if you're invested in the broader equity markets, I emphasize, and also if you're invested in tech stocks. But everything outside of that has not done particularly well. For example, even though we've seen a rally in yields in the last couple of months, the long-term treasuries, for example, are still just roughly breaking even for the year. And if you look outside of the Magnificent Seven, as we well know, there's not really been a broad-based participation. But I do think that's exactly what changes in 2024, is that investors should have greater optionality to invest across different sectors and across different asset classes as well. And Becky, the reason I say that is if the Fed does indeed cut rates and if yields continue to move lower into 2024, then you can have sectors of the equity markets that really got hurt by higher rates. They can turn back around and you can have a lot of catch-up trades in what is lagged in 2023.
What do you like the most?
Well, there's a whole list of things, but I'll share with you in equities. When I look at the laggers, the biggest laggard has been unprofitable tech. And of course, you can put small caps into that category.
And remember, the reason unprofitable tech has been the biggest lagger is because people didn't want to speculate on these SPACs and all these companies because they thought they were going out of business because 2021 left a bad breath in their a bad taste in their breath. I messed up that analogy. Forgive me for that. But you get so now it's kind of like, well, if these companies are undervalued and they're going to get profitable, or at least we should take a second look at them because maybe even if they're unprofitable or still growing, they have some upside to be able to get
as well. 2023 has been about sticking with what you know, which is the biggest companies. But if you look at unprofitable tech, it is down something like 54% from the highs we saw in 2021. And it has been rallying very significantly in November and December, but there's still a huge gap to close. And again, when I look at smaller companies that were disadvantaged by higher rates, some of them may have been over-levered, some of them may not have had access to financing, but all of that, if that starts to churn, then I think that's a pretty significant catch-up trade. And then, Becky, the other one is real estate. That's really the other thing that people have abandoned throughout 2023, specifically commercial real estate, because everybody assumed that this wall of maturities is upon us, and that's going to get pretty, pretty nasty. Now, if rates are in fact declining, first of all, that means property prices may be holding out better than expected. And then, of course, the worries about the defaults, may be pushed back or maybe, canceled altogether. So I like those catch-up trades in equities. But Becky, don't forget fixed income, right? If you have yields declining leading up to the first rate cut and after the first rate cut, that means the rally for bonds continues as well. And again, that's why I say it's a broad opportunity set: equities, fixed income, venture capital, real estate, and more.
Here's what I don't get, though. If you think that rates are coming down and that's going to be a good opportunity for some of these areas, let's say small businesses that couldn't get access to capital before, or commercial real estate, doesn't that also imply that the economy is going to be coming down? If you're going to get the rate cuts, it's going to be because the economy is struggling a little bit. And those would be the same types of companies that would struggle in that environment.
Well, I think it's really two or threefold reason for why rates will be coming down. The first one, as you mentioned, yes, the economy should be running at a much slower pace. We're expecting something like 0.6% in the second quarter. But the other reason, of course, is inflation. Inflation should be hitting 2.7% by the second quarter of next year. And the third reason is, yes, you do have rising defaults, which slow the economy as well. So, but all those forces together, yes, slower growth, but also lower inflation, that's what should cause Fed to eventually cut rates. Now, if you apply that to what does this mean for the S&P 500, on the surface, it looks like, well, we're fully valued. We've got a 19 times multiple and $244 or so on the S&P 500 earnings. That gives you right where we are today, 4,700 to 4,800 in fair value on the S&P. But Becky, one thing to remember is that the earnings estimates will shift, and at some point they will take into account 2024 or 2025 rather. And when those earnings estimates shift and the 2025 number for S&P 500 earnings is actually 275, that's what gives you the upside. And
she's right about that. We got to get into the market open, but she's right. As the earnings estimates shift, that means you can get a higher multiple because earnings companies are doing better. As long as inflation continues to be down, rates come down, that puts in the narrative for actually having a market continuing to rally into 2024. And that is the thesis for why 2024 might end up being a year that ends up being good for a lot of other people. We got 5 seconds until the market open. Thank you, 828 people, for being here. It means the absolute world to me. We are here. We are alive on planet Earth, and we are trying to make some money. Ladies and gentlemen, the stock market is once again open. Wake your ass up. Here we go. Let's get into it. The stock market open once again. Let's start off with CleanSpark. CleanSpark, ladies and gentlemen, up 2% on the day, $11.09. I know those $10 calls had a lot of open interest on them, so there's some liquidity going on right there. CleanSpark, $11.09, up 2.3% on the day. Riot, up 3.29%. Bitcoin was up 3% yesterday. It was at 43,000. I think it's a little bit below, but that is what has led to crypto companies continuing to go higher. It went down to about 40,000. Everyone thought it was going to 37,000. Then it ballooned back up to 43,000 last night. So that's why some of the crypto companies are doing better. Snowflake at 199, Coinbase at 155, up 0.9 for 5% of the day. Coinbase has almost 3.5x on the year. The stock was at $32 when the SEC said they were going to sue Coinbase back in February. Now Coinbase is suing the SEC for a bunch of different reasons. So Coinbase continues to do well. Palantir 1795 up 0.7% of the day. S&P 500 472 up 0.18% of the day. S&P continuing to be at this 470 level, which is incredibly encouraging for the broader markets. And then you got Robinhood at $12.11. Robinhood, again, we talked about them yesterday. They paid $11 million to bring $1.1 billion of assets onto the platform. One concern for Robinhood is that their customer acquisition cost might end up being really high in Q4 because they've gotten so much money onto the platform. However, I believe the transaction revenues will be strong enough for them to still be GAAP profitable. I really do. I think their transaction revenues will still be strong enough for them to become GAAP profitable. I do not think they end up becoming unprofitable this quarter and just show like, yeah, but we have a ton of assets. I think they know investors want to continue to see profits. And I think the monthly active users are going to go higher because of the UK crypto expansion. The fact that customers have to pay for their options contracts before Robinhood used to pay for it. Now I have to pay 3 cents every time I trade a contract. That's going to increase profitability. And overall, they're going to have better transaction revenues because rates have come down. More people are trading. Crypto is up 75% month over month. So I think Robinhood will be profitable, even though it's going to be hard. Robinhood now $12.20, up 0.22% of the day. Where's SoFi? Is SoFi doing what it needs to do? SoFi $9.90. SoFi is trying to close in on $10 today. Goodness gracious. There we go. SoFi is doing its thing. SoFi is doing its thing right now. Wow. There you go on SoFi. You're seeing some momentum there on SoFi get a lot higher. That's not bad, folks. That is not bad at all, seeing SoFi get there. I mean, look, if SoFi hits that $10 mark, that's a good psychological level. The 1170 was their last highest on SoFi. This was what, 1170? This was back in July. Not easy to get back to those levels, but we're seeing some nice momentum there on SoFi. Let's see if it can continue to do at 984. I think there will definitely be some selling pressure. People will want to get out and, take some profits for those that bought it at 6, but let's see. I mean, it was at $8, now at $10. That's a hell of a move in the past couple of days. Robinhood $12.20, Bitfarms $3.03, Amazon $154, Amazon new 52-week high, Wingstop $254, Pfizer $27.33, Adobe at $600, Snapchat $16.31, Snapchat down 4% on the day. That was probably going to happen. I mean, Snapchat at $17.90 was a little stupid. So Snapchat $16.30, that makes sense. People taking some profits there. Enphase, oh my God. Oh my. Enphase Energy, the microinverter company. The company that inverts the micro, that got fudged by the macro. You see what I did there? Now at 129. Wow. Comeback kid of the century. I'm on my Dan Ives coming up with these random names for these companies. Enphase is the comeback name of the century. Now, Palantir is still the Messi of AI. So Palantir, I think, will outperform Enphase in the next decade. But Enphase is the comeback kid of the century. You don't get to $72 and have everyone, including me, make fun of you, and then come back to 130 in a matter of a month and a half. I mean, shout out to those that have Enphase. Everyone wrote this company off for dead. Jerome Powell saved it. What more can we say? Those interest rates come down. Growth stocks do better. Truist 36.55 up 0.58% of the day. Tesla 255 on Tesla. Elon Musk has reportedly removed Disney from Tesla's. I actually have an update on that. Let me go to this tweet right here. This is why I like the bookmark feature on Tweet. I get to save these tweets. All right, here you go. So here's the update. A source told Electrico, which is a company that covers Tesla, green energy, all that stuff, that Tesla informed Disney last week that it would remove their app from its cars. This weekend, Tesla informed Disney that it would only remove from cars of owners who had never used the app before. The automaker didn't give a reason for the removal, but it was a read between the lines situation. And the article talks about why this is a childish tantrum level reaction. So we do know that this was officially from Tesla. They informed Disney, hey, we're removing your thing, but they didn't give a reason for why they're removing your thing. Look, I honestly, this is hilarious to me. This is just, where's Disney right now? Disney stock price at 93, up 0.3. This is just hilarious from what's his name? From Elon Musk. It's petty. I think they'll eventually deal with it. I think he's just trying to fuck with Bob Iger at this point, but they'll figure it out, and I think they'll be fine soon. But for now, it's hilarious. Palantir, 1812. Look at that bounce up to 18. Look at that bounce up to 18. That was incredible. It was stuck at 17,895 and just made a nice bounce right there up to 18. So not bad at all for Palantir. Seeing a lot of good momentum there currently on Palantir. We got S&P at 472, Robinhood 1221. Robinhood's got to get to 1250 and stay above that. That's the next level for Robinhood. So 1220 is awesome. If we can hold that, that'd be great. But until we get to that 1250 level, it's going to be really hard to make a push towards 13, which is where we got to get to. So Robinhood right now, 1220. We'll see if we can get there. Robinhood's still a $10.5 billion company. Half of the market cap is in cash. Now, 3 weeks ago, they had more cash than their market cap, which is why Robinhood was obvious. But right now, half of the market cap is still in cash, which is just incredible. Again, a lot of that cash is being used to pay off the acquisition fees that they're getting for these customers, their interest rates, etc. So I think they'll squeeze out GAAP profits, but we'll see if it happens. Let's check on Google. They have to pay $700 million for some fine. Google's up. Market doesn't care anymore. The Gemini thing, market doesn't care. The Epic lawsuit game, market doesn't care. $700 million. $700 million is a lot of money. It's close to $1 billion. That's like it's a hefty traffic ticket, but it is a traffic ticket for Google, and market doesn't care too much. Stop Console War says, wait a minute, Duel might be the largest comeback of the century. It fell from 170 to 65, and it jumped back to 150 all within a year. You guys want to know something about Duolingo? This is another one that Chris called. Duolingo's at $240 at $70. This was, right in January. There's an episode on Finance Junkies where Chris is talking about Duolingo and their language learning fucking moat and all this shit. And I was like, dude, it's a language learning app. Like, what? It's fucking like, why are you? And then I looked at their numbers a couple of months later when they like doubled, and their user growth is just insanity. The innovation they pull off in terms of getting people to come to the platform is it's like literal insanity. It is insane. Like 60% year over year, like just ridiculous growth. But it had already doubled. It went from 60 to 120. I was like, all right, I'm not buying in. Now it's at 240. I mean, Duolingo was 64 January. It's 240 at the end of the year. That's a 4x, right? 64 times 4. Am I wrong on that? 64 times 4. That's basically that's literally like a 3.9x. I mean, Duolingo is one of those companies. So you're right. Duolingo, I don't call it comeback kid of the century because when it IPO'd when it got to 170 during the COVID highs, right? That was not real. Duolingo is not a company that is still unprofitable at the end of the day, right? Like it's a $10 billion market cap. It didn't deserve to be that high back in 2021. So it deserved to fall, but their growth has been amazing. Enphase, the reason it's a comeback kid of the century is because everyone explicitly like bullied Enphase, including me. Like we bullied, like it's like we just kicked it in the face and we literally just made fun of it. That's why I think Enphase is the comeback kid of the century, because it didn't take our bullying. It stepped back up, and well, it didn't really do anything. Jerome Powell kind of did everything, but nonetheless, the stock is the stock, right? And so it's here. SoFi at $9.89 right now, trying to break through that $10 range. Palantir $18.09, Coinbase $154, S&P $472, Robinhood $12.25. All right, so we're trying to make a run. We're trying to make a run here on Robinhood. We got to keep pushing, but it is trying to do what it needs to do. Amazon $153. Yeah, it's a green market, folks. It is a green market, and we got Palantir at $18.10 as a green market. But Duolingo has less than 140 million quarterly revenue and is a $10 billion company. Their growth, I think, is what investors are paying for. This is what I mean, though. But this is what I mean by small caps, right? Duolingo is probably the definition of a small cap, right? Unprofitable, but growing. And this is where a lot of the market's like, all right, so we gave Google, a 60% return this year. We want companies that haven't gone up 60% to get a little bit more potential alpha. Duolingo's growing. Maybe the valuation is I don't think the valuation is 2021 kind of insane, especially because the growth has picked up. But if they continue to keep growing, I mean, your investors are going to bet on some of those names. And see, the question is now, is Duolingo a speculative company, right? Because if the growth is there, but the speculation is high, then that's when you get into a conundrum of how do we value this company? But I don't know if the speculation is that high for Duolingo. I mean, I've started studying the thesis ever since I wrote it off, and there's a real argument for why people want to learn language. By the way, their whole thesis is it's free with ads, and rich people can pay for the subscription. So they kind of have this mission of they want everyone to learn language for free. And so if the people in the West pay for the people in third world countries, that's kind of their way of subsidizing everybody to get this mission to go forward. And it makes sense because if you have a lot of people paying for the subscription, you can offer it to free for a lot of people. And then it's just the question of, is the product good enough? Is it better than Rosetta Stone? You guys remember those commercials on TV a couple years ago, Rosetta Stone? Dude, I never used Rosetta Stone, but Duolingo seems like it's 10,000% better than Rosetta Stone. Rosetta Stone, you fucking popped in a DVD and you looked at Duolingo is it's an interactive product at the end. It's like TikTok for language learning, which is really incredible, really, really incredible. And it's doing well. It's not just learning languages. Eventually they want to have AI learning different subjects from anywhere. I agree. Chris makes a good point here. The other point about them is like music is something they're going to get into, right? Kids learning music. That's tough. Chess. I don't know how much you guys know about chess, but there is a massive media enterprise around chess. Look at the channel Gotham Chess on YouTube. This guy is basically the CNBC of chess, and he's killing it, right? Like chess has basically in the past 5 years turned like LeBron James, Michael Jordan, Steph Curry. They've made those characters in chess. You got Hikaru Nakamura, Magnus Carlsen. You got some other names on the Alexandra twins. Like chess is a big sport. And that is great for Duolingo because if they want to offer chess as something kids want to learn, right? That's valuable. Math is something they're getting into, chemistry, science. I mean, you could imagine, I think the bull case on the top of my head is Duolingo incorporating with schools because I think they work with some schools, but imagine every single public school student in the United States of America gets an iPad that has Duolingo on it in their Spanish class. I'll tell you, I took Spanish for 7 years. The only thing I know is hola, ¿cómo estás? Muy bien, gracias. Usted. Like that's it. That's hello, how are you? I'm good. What about yourself? Like that's it. That's all I know how to say. Me llamo Amit. My name is Amit. Like I took 7 years of Spanish. That's all I know. If I had Duolingo in my class, might have been better. Might have been a lot better. Someone says, come on, Amit, chess isn't a sport. This is wrong. This is absolutely wrong. I will argue to the death of you. This is wrong. You got to listen to some of these chess guys talk about, they are sweating for 7 hours in these games, bro. Like the mental gymnastics you have to go through to be able to be as good at chess it's a lot. It's definitely a lot. So I would argue chess is a big sport, but the point is the popularity is growing, which is the important thing. Palantir 1814, Robinhood 1239, baby. Oh my, I did not see that. Wow, there we go. She's pushing. She is pushing for 1250. SoFi as well, 993. Robinhood is pushing. She is pushing to get to that 1250. 1250, we got to get there, and then we can break that. Robinhood's pushing. Palantir's pushing. S&P, look at S&P. It's up 0.24%, 473 now. SoFi trying to get to that $10 range. SoFi and Robinhood kind of moving in tandem with each other. For a long time, Robinhood was moving up. SoFi was just stuck. And then the Fed lowered rates, and then they both kind of exploded together. So Robinhood trying to make a run for it along with SoFi. That money is coming in. People are like, you know what? That trading is going to happen. Let's buy it on Robinhood. Snowflake at $200 now. Google at 138. Look at Google making a run for it as well. Google up 1% on the day, continuing to go higher. Bitfarms at $3. Crypto companies doing well. Not bad. Palantir 1816, 1817 now, up 1.83% on the day. Palantir. Let's see if Palantir can get to that 1830, 1840 range. It was there a couple days ago. If we can get that, that would be good as well. Enphase, yeah, thank you for this, Lussy Picker. Enphase cut 10% of their workers. I don't know if it was exactly their workers or it was like their contractors or something, but that's another thing the market likes. Same thing with Spotify, right? They cut 17%. Market liked that a lot. I mean, at the end of the day, you cut those employees, you know, market gets excited. Market's like, all right, that means increased savings, decreased costs. Fuck it. Here we go. Let's get some momentum. Let's keep it going. Let's hear from Chris Vernone about why the market will continue to get higher in 2024 and keep it going. Here we go.
S&P 500 coming off its longest weekly winning streak in some 6 years, with a number of sectors hitting new highs again today. Our next guest sees some possible short-term trouble in the charts heading into the new year. Let's bring in Chris Verrone, head of technical and macro research at Strategas. Welcome back.
It's great to be here.
So technically speaking, Are we looking a little dicey? What's the story here?
Well, I just want to nuance this here a little bit. We've had this incredible momentum surge over the last 6 or 7 weeks. And when you look at kind of the long-term track record behind that, whether it's getting 90 stocks above the 50-day moving average or the surge in 1 month highs or the 7 weeks in a row with market up, that tends to foreshadow very strong returns 6 and 12 months in the future.
Okay.
When you look at the returns over the next 1 to 3 months, it's more random. I just want to be mindful that you had this momentum surge. You could get a consolidation or a pause as we kind of go into a presidential election year. The seasonality around that tends to be a little unique. We have primaries starting in mid-January. Just something to keep our eye on here.
That's fair. I feel like we need to separate though the what from the why.
Yeah.
Like the what is like, oh my God, we've done so much in
Sure. 6
weeks. Look at the numbers. Look at all these. Look at the small caps. They're up X. Then this sector's up that. The why is more important than the what, in my estimation. Why did we get here? Well, we got
I agree. I mean, a lot of people are like, oh, we're up, we have to come down. But it's like, why? If there's a good reason why, then maybe we don't have to have a massive sell-off as well.
Out here because the economy's holding up better than most people thought. And the Fed's, we anticipated this pivot. The market anticipated a pivot that the Fed ultimately seems to have made.
Absolutely. And I think when you look at kind of what are the harder questions for 2024, at what level, for example, do 10-year yields no longer reflect a pivot? At what level do they start to reflect real concerns about the economy? And I think using the market as our intuition to make that judgment is going to be key. Look at things like consumer discretionary. It continues to work. I think so long as things like discretionary is better than staples or transports are better than utilities, you'd say the market's okay with the economy here. So in terms of the longer term call, that is still very much intact. Just be a little aware of some of the sentiment work here. I don't think it's a huge issue in late December, early January, but the flows are getting hotter. And what's the immutable rule of Wall Street? As prices change, so do attitudes, right? And attitudes of the last 4 or 5 weeks, rightfully so, have certainly changed. I just want to be a little bit aware of that into the first part of 24.
I feel like
I think he's correct on the statement. At the end of the day, even if sentiment gets a little bit more greedier, the question becomes, is there a reason for a massive sell-off? And as of now, remember the massive sell-off we saw 10% back in October? That was because inflation was unchanged at 4%. That wasn't changing. And because that wasn't changing, ELF just hitting $150. Oh my goodness. That's why we had the sell-off. Now sentiment has changed because inflation numbers have changed and the Fed has made it obvious that inflation is starting to change because they pivoted. And so that's why we're seeing a lot of this momentum. Square is up $76. I will take my shit for this. I said at $39, Square was shit. I was wrong on that. I mean, Square is just absolutely just baller performance. And quite frankly, I didn't know much about Square. I just didn't like the stock-based comp at $39. I was like, this is just ridiculous. I also didn't really like Jack Dorsey that much as a leader. But this goes to show you your ideological opinions around a stock mean dog shit when the market decides to move in a certain direction, because the market's going to take a lot of stocks with it. And some of these stocks will eventually fall down, but Square at all-time lows at $40, at some level, that's probably not the best time to be shitting on a company. That's the other thing. Like you probably don't want to shit on a company when it's at its lowest, right? Robinhood at $7, you can say whatever you want about Robinhood. At $7, it's like, there's maybe the same thing with Snapchat, right? At $8, maybe there's something there given at its all-time lows, and there's an opportunity. Square makes money off Bitcoin, I've been learning. I don't know exactly how they make money off Bitcoin. I think kind of through some type of transaction fees. So customers have been investors didn't really like that Square kind of reports the transactions as revenue to an extent. I don't know that much about that. I'm learning more deeper about how Square calculates all this shit, but apparently that's, what Square does. And they've been seeing momentum there. And obviously if Bitcoin goes higher, then yeah, that's another reason why Square continues to go up, or block, whatever you want to call it, because Square is higher. 150 on ELF, up 1.74%. Not bad at all. Seeing that momentum on ELF. SoFi trying to close in on that 10 Dolores. Trying to close in on that 10 Dolores right here. SoFi at 995. Wow. Absolutely incredible by SoFi trying to get here. Remember, the main fear of SoFi was that going into 2024, there's going to be a lot of delinquencies and recession, and SoFi is not prepared for it. They're not profitable. I think all of those are going to get resolved pretty soon. I mean, and if it does, then SoFi is going to be able to continue to make this momentum. So that's SoFi. What else do we have? Let's go to Roblox. I want to see Roblox. I haven't seen Roblox in a second. Roblox, I think, has been doing well as well. Yeah, look at that. Roblox, $44. This bottomed at $24.88 in September. So if you sold in September, you took a loss. If you had a little higher average, you broke even. If you bought, in April at $50, you took a 50% loss. If you sold in September, you broke even. If you just held on and allowed it to continue to go higher. Cash App, yeah, Cash App's another big asset of Square, which is very important. Ricardo says, every time I hear you say Dolores, I hear Flores. I don't know why I started saying Dolores. It just started happening. Do you guys watch Westworld? It was like the greatest show of all time until season 3. Then they just nuked the show. I don't know. They just destroyed it. But I watched Westworld when I was in college back in 2017, and Dolores was the name of the main character. And maybe she's stuck in my head when I think of dollars. Now I think of Dolores, but that was such a good show. And then they ruined it. Season 3. It was just garbage. Palantir 1812, Coinbase 157, up 2% on the day. Absolutely incredible. Let me go through some headlines. Let's go through some macro headlines that we've got going on. And let's talk about some of those as well. So let's do this. I'm gonna just go through a bunch of them. Canada's inflation rate has unexpectedly held, Annual inflation rate in Canada was at 3.1% in November of 2023. So basically their CPI came out today, remaining unchanged from the previous month and firmly above market expectations of 2.9%. So Canada's inflation is not necessarily going down. And it's definitely coming in a little bit higher than what the market wants. Now, granted, this is not ridiculously higher, but it is not going down, which is not the best. The result was loosely aligned with Bank of Canada's signal that headline inflation is expected to remain stubbornly elevated close to the 3.5% mark through the middle of next year, and that banking policy is warnings that another rate hike might still be necessary. So Canada's in contrast to the United States. The United States, Jay Powell said, no, it's going away. It's coming down. We're going to cut. Canada, it says, actually, we are going to be a little stubborn here. So Canada has inflation continue to go higher. They're trying to figure that out. Bank of Japan is holding their rates. Bank of Japan maintained the key short-term interest rate at negative 0.1% and that of the 10-year bond yields at around 0% in a final meeting of the year by a unanimous vote. The central bank also left unchanged a loose upper bound of 1% set for the long-term government bond yield. The board said that it will patiently continue with monetary easing amid extremely high uncertainties at home and abroad. That is really good for the United States. Our 10-year right now is at 3.916, still below 4%. So we got Bank of Japan staying pretty normal, or Bank of Japan keeping things normal, even though Canada has higher rates. And another one is European natural gas has fallen 8% to below 33 euros per megawatt on Tuesday. This is reversing a 7% increase from the previous session. Investors disregarded concerns about shipping disruptions, shifting their attention to abundant supplies and mild temperatures amid heightened attacks on commercial ships by Iran-backed Houthi militants, which I don't want to talk about fully yet because I'm still learning about what's going on in the Red Sea, but there is some more geopolitical turmoil going on with Houthi militants in the Red Sea, and it's affecting oil prices. LNG tankers are altering their routes to be able to get oil from one part to another part, which is why we're seeing those gas prices start to come down. Natural gas prices come down 8%. So those are some of the headlines for you guys. Let's go back into the equity markets. We got Canada leaving their interest rates, Canada having inflation unchanged, Bank of Japan leaving interest rates unchanged, and EU natural gas going down because of what's going on with the Houthis. Google 137, SoFi 992, Robin at 1235, S&P 473, and Enphase is up 7.9% on the day. 7.9%. Wow. I mean, that's incredible, folks. That is absolutely incredible. Yeah, I mean, look, that it deserves it. If interest rates are coming down, remember their guidance was about 300 million. If that guidance gets higher from 300 million to say 450 or something, I doubt they're going to do that this quarter, but if they raise it the next quarter, Enphase is going to do well. They're definitely going to do well. Chris Biomet, great job this morning. Thank you, Chris. We'll see you tomorrow. Thank you for being here. Let's see some other stuff. SoFi 990. Oh wow, it's just 999. Yeah, now SoFi's getting there. I don't know if it'll break 10 because 10 is, remember, Snowflake. SoFi has 16% of their shares shorted. So what we could be seeing is a little bit of a mini short squeeze in the past couple of days, but I still think the shorts are stubborn, and I don't think they're going to cover that easily. I think the shorts, because remember at 1170, the shorts double down, and the shorts think this is a stock that's just manipulated and it's going to take time for them to break free. I don't think they're like the Palantir shorts that have been really scared. I think they've continued to double down. They might continue to double down again. And if SoFi can just keep executing, then there's going to be a massive short squeeze, but might not be happening just yet. Costco down a little bit, 1.7%, 1.3%. Snapchat 1671 down 1.85%. Roku's up. Where's ARK? Is ARK at 50? ARK's got to be above 50. Look at that, 52 on ARK. Kathy's had a great year. Kathy's up like 35% this year. Now, granted, 52 is lower. I remember I bought ARK at $88, bro. I was at a Dunkin' Donuts and I had like $1,000. I just bought some ARK and I was like, oh yeah, $80. It's down from 160. Great deal. I'm getting a discount. And then you guys saw that public video I made like in April of 2022 where I just got so annoyed. It got to $29. I said, fuck it. I'm taking this loss and I'm dumping it in Palantir. I don't care anymore. Fucking got me investing in Roku and all this shit. Like I'm just going to Palantir. I would still not be breaking even on the 2022 purchase I made of ARK, even though ARK's up 35%. That's a bad ARK got. But if you got it at the bottoms, wasn't too bad. She bought $25 million of Square yesterday. Yeah, she did buy a lot of Square. Kathy bought a crap. She bought like 500,000 shares of Square yesterday. So continuing to ride the level of Square as well. All right, folks. I think that is it for me. Thank you all for joining. We have a green market. Stocks are doing well. We'll see if this continues to keep going higher, and we will keep it going from there. Let's end up doing the word of the day, and then we'll be done for today. Oh, this is a nice word. I already like how it sounds. Today's word of the day is perspicuity. Did I get that right? Perspicuity. I think I got that right.
Perspicuity.
There we go. We're on a win streak now. Clearness or lucidity as of statement. Oh, this is a good word. So basically, when you're clear, when someone is very objective, the author's use of simple language enhanced the perspicuity of her argument. The lawyer presented their case with remarkable perspicuity. That's what I'm trying to do every day. I am trying to present the stock market in a perspicuous way. I just took the word. I'm trying to present my case with remarkable perspicuity. How do you say this shit?
Perspicuity.
I'm trying to present my arguments with perspicuity every morning. And hopefully you guys feel that as we keep doing the market open every single day. All right. That's it for me. Nick says, what is your schedule for the holidays? Are you taking any days off? No. There will be a market open every single day except Christmas, because we don't have Christmas market's not open. Dude, there's no days off. We are going to be here every single day. Daily Palantir will come out every single day. And in fact, guys, going into 2023, I'll tell you guys about my plans going into 2023, or 2024. I'm sorry. Market close. I'll just leave those two words, market and the word close. I'm going to leave those two words out there. You guys do with them whatever you need to do with them. But going into 2024, we're ramping things up, folks. We are ramping. That's why I said in the beginning of the stream, I think I need a new set. Like, you see how this camera just fucking died? You see how this camera just died? I think I need to invest in a new camera, dude. I think I need to invest in a camera that doesn't die and can still be 4K for more than 20 minutes. So I think we need to do that. I think we need to get a MacBook, because this thing overheats all the time. Like, I think we just need to use. I didn't show you guys this, but I'll show you this right now. The reason this mic is even held this way is because of that water weight that's on this stand that's keeping the mic solid, bro. If I take this off, the mic falls down. I think I should just invest some money and just make this legit and not have to worry about, oh, I need to fill up the water so that there's enough weight on the thing to make sure the mic doesn't fall. I think I should probably do that. Are you going to start charging us? No, the market open will be free forever. I'm just going to take my own money and try to invest a little bit and make this set better. I'd love a daily market recap. That's kind of the idea of the market close. I think market close is going to be fun. I have a lot of ideas for 2024. I think we're going to ramp this sucker up. I really do. I think we're going to ramp this sucker up. So 2024 is going to be fun. I'll go live on Christmas. We'll go live on Christmas just to talk as normal. I think late night Christmas stream. My parents are actually going to Atlantic City on the 23rd. My mom's birthday is on Friday. And so Christmas Eve, I'm going to be home alone anyway. So we should just do a big ass stream Christmas Eve. Honestly, I think that's the plan for Christmas Eve. I have nothing to do Christmas Eve. So I'll be at home. We'll start streaming at 7 and we'll end at 12. We'll do a big ass live stream. We'll order some Uber Eats and we'll just have a fun Christmas Eve, especially for the people that don't really go to parties or don't have families that do a bunch of holiday traditions. That's what we'll do for Christmas Eve. We'll be here on this channel. Shave your head again. Yeah, not gonna do that. Maybe I should shave my head one day. That would be fun. Option C, dude, you didn't have to do this. Thank you so much for the $4.99 super chat. That just warms my heart, guys. You don't have to do that. I've got to be a big boy, take my money. I've got to invest in my own setup if I want to make this legit and keep it going. And so, you know what 2023 has shown me is that, obviously you guys are seeing the numbers, 800 people showing up every day. It's starting to become a thing where you should take it a lot more seriously than it is right now. And as a result of that, I just need the equipment. And Apple, they have good 24-month finance. I just bought my sister a MacBook for her birthday. So I got her a MacBook and, I'm financing that myself. So I pay $130 a month for her MacBook. I'll pay $200 for another MacBook for myself. And that's not going to kill the bank if I have to pay $200 for good equipment. And I think it's a decent investment. So option C, really appreciate that for the $5 super chat. That means a lot to me, especially because you said it's for the camera. You didn't have to do that. So it means a lot. Thank you so much for that. Matenja says, sorry if I'm saying that wrong. I'm new to your show. What times are you live? 8:45 a.m. Eastern. We are live every single day. We are presenting the market open. This is my version of CNBC's Squawk in the Box. And I'm trying to build this sucker up to be bigger than CNBC's Squawk in the Box. I say that in a very humble way, but this is the Market Open one-man show trying to bring fun to the markets. We have guests that are coming. I think 2024, we're going to ramp up the show to be better. We've grown it from about 200 people every day to close to 900 every single morning. And so it's a fun show. I think people enjoy it. I'm getting better at analyzing the macro every day, trying to get better at presenting the news. I tend to try to bring, what most people tell me every day. They can't stop telling me how incredibly hilarious I am, that they're just like laugh. It's like a Netflix comedy special every time they watch the market open. So, from that perspective, I think there's some value there. And we're going to try to 10x this in 2024. So 8:45, and then eventually a market close. It's going to start happening probably around 3:45 to 4:40ish, maybe like 3:30 to 4, probably 3:45 to like 4:45 every day. That's like the idea. By the end of December, I'll have all this ready to go, and I'll map it out and I'll tell you guys what we're going to do. So Arnie, thank you for that. Amit, better than CNBC. The cool thing about CNBC is they have the guests, right? And so I got to try to get the guests. If I can get the guests, then we're going to start to get this to keep going better and better. So yeah, that's the ones we're live. And I'm thinking of bringing back the daily Palantir streams. I know I make a daily Palantir episode, but I'm thinking of also doing a daily Palantir stream. And so there's a lot of stuff I got cooking for 2024. We're going to get that out there. Laza says you're better than CNBC. I appreciate that, Laza. That means a lot to me. I think I've recognized, look, remember, I sound like a broken record for a lot of the people that know me, but I did debate in high school. I was pretty successful at it. I became an international debater. I was 7th in the United States. I was the 3rd best speaker in Europe, but who's counting? And then I started becoming a coach, and my kids started winning multiple championships. So I understand the process of communication when it comes to building out an argument and creating a thesis around that argument and presenting it to an audience. The stock market has given me an avenue to really, because I have a passion for it, take those skill sets, apply it with what's going on in the second to second updates of the stock market, and then create it into this symphony of a market open, and then present it to those that are willing to listen to it. And so if we can just work with the algorithm and keep growing and keep being consistent and make it fun and get guests, this thing could really do well. It could really, really be a fun thing. And to me, it's the most fulfilling thing in the world, because you guys know I love this shit. Like, this is not a job. This is like, I wake up every morning. I fucking love this shit. And so to me, it's like, there's not that many chances in life where you get to do something you love to do and potentially build it up to be something big. And so if that's the opportunity, maybe I should buy a stand for my microphone and not use the water as a way to hold it down. So yeah. Amit's great at spitting out words, so no wonder he did well debating. Yeah, dude, I'll show you guys maybe on Christmas Eve. I have a bunch of debate videos. I'll show you guys. They're all on YouTube. They're all just like unlisted links. I'll show you guys. Christmas Eve, we'll do a bunch of like fun stuff, and I'll show you guys some of the debate videos and all that stuff. So yeah, that's it for me. Thank you everybody for being here. I'll see you guys. Finance Junkies. Oh, the other thing I wanted to say to that question from Maneha of what time to go live. I also have a podcast called Finance Junkies. Let me put it in the chat right now. That goes live every night with 3 other guys that are smarter than me, 9 p.m. every single day. I think you guys will enjoy that if you're not subscribed to this one. It's fun. It's a fun podcast. 500 people show up every day. I think you guys will enjoy that one. Auntie says, Amit is my daily dose of energy. That's what I want to be every single day. That's exactly what I want to be every day. Daily dose of energy. Thank you, everybody. Appreciate it. I'll see you guys 8:45 a.m. tomorrow, 9 p.m. Finance Junkies and Daily Palantir episode will be out later today. Bye, everyone. Have a good one. Thank you. Bye-bye.